Good evening and welcome to Money Matters. I'm David Ebner with Merrill, Lynch, and with me today is Charles Shields with Wells Fargo Advisor. Charles,
good to see you,
always
David.
a pleasure.
How you doing?
Well, great. How about yourself?
Real good. No complaints.
Well, we have a great show tonight. We're going to talk to an author of a book, After 100 Years. So I'm looking forward to talking to Joe about that. But before we get to him, are there any opportunities in the emerging markets? We've seen them pull back here this year. Is there opportunities there, you think?
Well, of course, you never know where the bottom is or the top in anything, but when I see U.S. markets outperforming for 2 or 3 years and emerging markets are out of favor, it might be a good time to look. Obviously, our viewers and listeners should talk to their financial advisor before they make any decision. But I saw an interesting white paper by a mutual fund company that was talking about dividends being pretty solid in emerging markets. This particular mutual fund is bringing out a fund, which they rarely do, and they always bring them out at a time when they think it's out of favor, that sector's out of favor, as opposed to many mutual fund companies that bring them out when something's red hot. So that made me focus some attention in that sector. And I do think there's some good investments in emerging markets right now. How do you feel, Dave?
Yeah, it's interesting. I love emerging markets right now. And I think, 4 years ago, China was all the rage and the BRIC was all the rage, right? Brazil, Russia, India, and China. Yeah. And they've fallen out of favor. Ironically, the demand hasn't fallen out of favor. So, we have 7 billion people on this planet, right? 320 million people in the United States. So that means the rest of those billions are someplace else. And we're watching these individuals go from substance farmers, if you will, into low class, middle class, blue collar jobs, and more. And that pressure, if you will, is going to increase as you increase your standard of living, as these families, if you will, increase their standard of living. So I think that it's a phenomenal opportunity. I think you hit on a point, and I don't think a lot of people realize this. You talk about dividends in emerging markets, and conceptually they don't sound correct, right? Why would an emerging market pay dividends? Well, because a lot of these companies that are in quote-unquote emerging or developing markets are really very developed global companies that are getting their revenues across the world, and so they're able to pay dividends just like large companies in the U.S. and large companies in Europe and Asia. So I think it absolutely is an area that people should go into and take a look at, and it should definitely be in their portfolio.
So we have more consumers over there at a time the dollar's been relatively weak, helping us export our stuff to them. So it looks like a place to look anyway.
I would have to agree with you on that. Well, now let's jump across the pond back to the United States. What about government bonds?
Well, I'm scratching my head trying to figure out why the long bond yields have stayed pretty low as we expect our economy to recover. So either our economy's not going to recover, which I haven't seen enough evidence to think that's true, or inflation's not going to be a problem. The bond market seems to be suggesting that inflation won't be a problem for the foreseeable future. I'm scratching my head over that, but I've learned not to argue with the markets. How about you?
Right. Well, you don't fight the Fed, right? The Fed has obviously had an easing policy for a very long period of time. I think Milton Friedman famously said that inflation is definitely a monetary issue. Always has been, always will be. You have a lot of easy money into the system. Eventually, you're going to see inflation. But scratching your head's you're right. Where is the inflation? We're not seeing it. We're seeing bits and pieces, maybe a little bit in the energy sector, a little bit in the food sector, but we're really not seeing it overall. And I guess maybe the confidence. The consumer confidence isn't really there where we think it is, because we're definitely not seeing any pricing pressure on that. And clearly unemployment, while it's come down a lot, it's still high, and so there's no wage inflation. And that's really where you're going to start seeing inflation kick in.
One thing I do know is that 2.5% 10-year bond is not much competition for the stock market. That's what I do know.
It shouldn't be, right?
Yeah.
What about munis? How does it affect munis?
Well, it seems to me that munis are in a little different category. We don't have the Fed artificially buying municipal bonds, and we have taxes going up for more and more people. The new Obamacare taxes, 39.6 tax rate, et cetera, et cetera. So as taxes go higher and you can get in the fours, mid fours, 4.5 for high quality municipal bonds where you don't pay taxes. And if you're looking at U.S. government bonds, you're getting much less of a yield and you're paying taxes on them. So I think it's possible that muni bonds could hold their value even if long-term government bonds and intermediate-term government bonds start to lose some value as their rates rise. What do you think?
I've had this exact same discussion with several clients that look, 2013, I'm sure you've had this, virtually every client I've talked to about their 2013 have sticker shock. I can't believe it was that much that I had to pay extra, right? And they're thinking very hard about taxes again, even though it's only going up 5%, but 5% is pretty steep on dollar amount. So yes, munis I think are a place, and I think that's why we're really seeing the muni bond market stay above in that premium space, 5, 10, 15% premiums for those markets. Obviously, there's some depressed markets. Detroit would be one of them. Sure. But the well subsidized states are doing just fine, and I think it is an area that's going to stay strong for a while for the foreseeable.
So viewers and listeners should get help from their financial advisor to make sure that they're buying the right quality bonds, but there are opportunities in muni bonds, in my opinion.
I agree with you. Well, what about dividends? Dividend companies seem to be outperforming growth in this recovery.
Yeah, over the shorter term, and we don't want to time the show for our viewers and listeners, but over the shorter term, value and dividend-paying stocks are outperforming the growth stocks. But I have noticed over the longer haul, when you're in a major bull market like we've been in, when you get a pause, the stuff that's performing the best corrects the most, trying to scare people out, and then that turns around and goes up again. So I would be looking for some high-quality growth stocks also. If there's a company that's got a niche, or if they've got a product that everybody in the world wants, and they can continue to deliver that outperformance, I think a premium will be paid on that kind of stock, whether they pay a high dividend or a medium dividend or even a low dividend. And
if you add on what we talked about earlier about the population growth around the world and the consumer growth around the world, that's probably a prudent way to cycle your investments. Well, we have a question before we get to our guests, so if you don't have time for it. This comes from Ralph E. Moore from Pottstown. And Ralph says, are there any ETFs on timber?
Well, timber is a pretty specific category, and there are ways you can invest in timber. There are companies that own vast timberlands that might be undervalued. There is a company, Plum Creek Timber, which they can take a look at, talk to their financial advisor before they buy any individual stock. So there's ways to invest in timber. But I think you have to ask your question, what's the housing market going to do over the next 5 years before you decide to invest in timber? And of course, you can invest in a commodity fund, part of which is lumber, if you want to do it that way. But I don't know of an ETF that only invests in timber.
I agree. I piggyback on you, Charlie. I think that's too specific of a investment for individual investors. And if you individual investors out there, you really consult your financial advisors. Look at a well-diversified portfolio. Timber is just one of those commodities, and there's lots of them out there. And you really should have a basket of them, not just an individual. But if you have a great question like that, and we'll have a great answer that Charlie gave, please send it to us at Money Matters, 205 East Levering Mill Road, Ballykinwood, PA 19004, or email us at moneymatterstv@gmail.com. Well, I'd like to welcome to our show Joseph Dunn, a business author who just completed a book published a book after 100 years. Welcome to the show, Joe.
Yes, glad to be here.
Good. Joe, before we talk to you about your book and some of the ideas you have in it, why don't you tell us a little about yourself and how you came about writing the book?
Sure. Well, business-wise, my career, I spent 30 years with Cigna Property Casualty Companies that was based here in Philadelphia. And the division that I worked in specialized in insurance for Fortune 500 corporations. They were our customers. So it was really a great platform for me to be able to see the operations, business strategy, culture of an awful lot of different corporations. And then when I retired, I decided to do some research into long term, what's the contribution of business to American society and what are the factors that influence it? So that's what led to the book.
Okay, in my research about you, I noticed that you say that government policy affects investments and innovation and job growth and all that sort of thing. And I think our viewers and listeners probably intuitively feel like that's right, but can you give us some hard evidence to support the statement?
Sure. There's plenty of hard evidence, and I think the best place to look is really at America's 20th century history for these reasons. It's that century that saw the rise of large publicly traded corporations. And in addition to that, we saw the expansion of the federal government's role in society. And importantly, we saw the emergence of a very large and robust nonprofit sector. If you look across the century, we certainly had a wide variety of presidential policies on a vast number of issues. Mm-hmm. And we watched majority control of Congress go back and forth, Democrat to Republican and back. Also important, we saw the evolution of Supreme Court doctrines on a great number of issues in law that affect the business community. So I really think we have a lot of information that we can mine out of 20th century.
All right, well, that's the view from 100,000 feet. Can we drill down and talk about a few specific examples?
Absolutely. Let me start with innovation, because I think we all realize that's important to job growth and the general state of the economy. I use patent applications as a proxy data-wise for innovation. Mm-hmm. And while we've made great progress during the 20th century and American society advanced a great deal, we actually lived for about 5 decades under policies that really stifled innovation, and that's reflected in the data about patent applications. The government's been tracking them since 1840. And over time, you see a gradual rise in the number of applications just about every year. The exceptions being years when there's a business recession or when the country is at war. Now, when we get to 1930, the number of applications had risen to an all-time high of just under 90,000 that year. And then the number falls off, which we would expect in a recession. That number and the pace of patent application growth should have recovered, if not at the end of the Great Depression, then certainly after the end of World War II.
Of course.
Mm-hmm. But it didn't. And something very fundamental had changed. And if we want to understand what, we look back through history and we say that in Franklin Delano Roosevelt's campaign for re-election to a second term, he launched a campaign that was basically based on anti-rich, anti-business. He raised taxes dramatically on upper-income households and on large corporations. And after the success of his re-election, his attorney general went on a campaign to basically weaken the protection of patent laws for inventors. Now,
so history can repeat itself.
Oh, it absolutely can. It's wonderful. And basically, while the rhetoric against business subsided after Harry Truman's administration, the same policies persisted all through the 60s and 70s. And I look at that 5-decade spread from the 30s all the way through the 70s. I refer to it as the dark age of business innovation, because the count of patent applications didn't recover to the 1930 level until 1970. And the pace of application growth didn't recover to the pre-Depression level until the 1980s.
But the 50s, 60s, 70s, right? The greatest generation, right? They came back from World War II. They went back to get their college degrees. Clearly we had energy crisis. Clearly we had the space. We landed a man on the moon, right? So there was definitely innovation happening during this period. You're just saying it wasn't at the pace as previous, or it wasn't at the pace as current.
Exactly. And the relative lack of innovation was noted by President Eisenhower in his own memoirs. And President Kennedy made mention of it in his State of the Union message in 1963. And Kennedy specifically pointed to high taxes as the culprit. Now, it's interesting because Dr. Edwin Land, who was chairman of Polaroid Corporation at the time, he advised President Eisenhower that in his evaluation, the country was much too focused on mass production of things that we had already mastered and paid too little attention to experimentation and innovation. Now, there were, to your point, there were certainly programs by the government meant to inspire and promote innovation, both the space program and then as we got into the 70s, you had a brand new Department of Energy. No doubt they did some good, but we didn't get back to real commercial business innovation until the 1980s.
It sounds like you're saying that there's a direct correlation between tax rates and innovation or patents.
Well, absolutely, and we can see it in the data. When we get into the early 1980s, of course, there were the Reagan tax cuts. Importantly, there was also a change. The Congress created a new federal tax court, or a new federal court, just to focus on patent protection issues. But tax rates clearly, because they affect the reward to an innovator and to an investor, that has a direct impact on innovation.
Direct correlation.
Yes.
Well, it's interesting. When I reflect back on those years, I started focusing in on the stock market in the mid-'60s. I was too young before that. And we hit 1,000 on the Dow, and then we went sideways from like 66 to 82 for 16 years.
Yeah.
And
Good years, huh, Charlie?
Yeah, that's right. And then of course, we from 1982 to 1999, the market went up about 14 times.
Sure.
So you think patents had a lot to do with that, and the innovation that had been created by going into that recession the first 2 years with Reagan, and then he lowered rates and focused on trying to encourage people to invest?
Well, absolutely, those were important years. You know, you mentioned the decade of the 50s and 60s, and those are very important. Those were years of great material growth for America's middle class. But what we have to recognize is that right below that middle class were 22% of Americans who lived with income below the poverty level, even in 1960. Mm-hmm. And in that same year, the poverty rate among African Americans was an absolutely horrendous 55%.
Wow.
So the prosperity wasn't exactly universally shared. And I think we have to look at the numbers involved. If we looked at those numbers today in an economy, we would hardly describe it as a golden age.
So what's changing that regard? Because I look back at the 50s, and obviously I'm a little younger, but when I look back at the 50s, I look at suburbia, right? You had the sprawl suburbia, fast food chains, drive-in chains, right? Cars, using our cars, driving our cars, where you went from a utility item to a luxury item,
sure.
If you will. Offices, buildings. How many buildings were built in the 50s, 60s, and 70s? So I just see society expanding, right? And again, going back to what I mentioned, the soldiers coming back from World War II, on the GI Bill, where there was great innovation. Was there not? IBM created the first computer during this time.
There were pockets of innovation. We also have to look at the fact that we really had an economy based on highways, housing, and high taxes.
Yeah,
and I think that relates very well to Dr. Land's statement. We're focused on mass production. We're not much focused on innovation. And we didn't really see a dramatic change until change in patent law and lower taxes gave investors more of the rewards of their own risk-taking. There were certainly innovations in every one of those decades. I think every decade produces great thinkers and great innovators. But not every decade produces business investment. And inventors rely on investors. Henry Ford relied on a dozen investors so he could launch the Ford Motor Company.
Right.
The Wright brothers needed investors to get their flying machine into commercial service. And much later, it took a financial investor to help Steve Jobs get Apple Computer Company out of the Jobs family garage.
Right. But you mentioned patent law changes. Are you saying the patent laws changed 1930 and then changed again in 1980?
Yes.
And if so, how?
Very dramatically. The courts, of course, in the 1930s and subsequently, each federal court would make its own decision about a particular patent case. Very few of them ended up in the Supreme Court. But it led, since there was an overall anti-business tone in the country, many of those decisions horribly weakened the protection that a patent holder had in the unique right to use his own property and to lease it out to others in the form of licenses.
So you have to file in every federal court, is what you're saying. Your patent, or it wouldn't.
Your patent was still a federal patent, but if you were attacked in one court or another, you might get two different decisions, or the same, what looked like the same case could come out two different ways.
One of the things that seems difficult to me with this is when a policy change is made, it takes a while to get it rolling.
Right.
So you may see somebody like Reagan come in with a policy change, but then you saw deficits for a while, and finally enough momentum was created by the wall coming down and all that sort of thing. And then Clinton gets in, and in his second term realizes if he's going to get reelected, he's got to act like a Republican, and he lowers rates, and everything looks fine for him. And then just as he leaves, we have that high-tech crash, which happened just as his successor walked in. So a lot of times you try to watch what happened on someone's watch, and that may not be exactly the story that you should be looking at.
Well, I looked at the last part of the century as deliberately as I looked at the first part. And a few interesting things. Reagan's tax reductions in the early 1980s and then again in 1986. And what really happened? First of all, innovation took off like a rocket ship.
Of course.
Between 1981 and 85, patent applications grew at the rate of 2.5% per year. That was double the rate they had grown over the prior 15 years. We also saw the inflation rate drop from 13.5% down to 4.5%.
We had a horrible recession to make that happen, but it happened.
No doubt about it. We also saw the unemployment rate decline between the 7% it was when Reagan took office and 5.5% in 1984. And by the end of President Reagan's second term, the poverty rate in America was 1 point lower than it had been when he took office. And for African Americans, it was fully 2 points lower. So we certainly had some social progress during the Reagan administration. Now, there were huge deficits in the early years of Reagan's administration, largely because of the military buildup that in retrospect people kind of credit for leading to the collapse of the Soviet Union.
I think that's what happened, yeah.
Sure. Now, we also had Medicare and government health costs start escalating rapidly late in the 1990s, and both President Bush and President Clinton signed very modest tax increases. But if we look at the time frame of the 80s and 90s, both of those decades, we were living under the broad policies and really the broad tax structure established by Reagan.
The peace dividend.
Exactly. And by the end of the 1990s, the federal budget was actually running at a surplus.
Yes, it was.
In the year 2000, the unemployment rate was 3%, and the poverty rate was at a record low across America of 11%. So, not too bad.
No, not at all. I mean, and are you correlating all that to lower taxes only, or is there? Because we didn't finish up on the courts. Did the courts eventually get together and you could file in one claim? Or?
The court system eventually was consolidated in about 1982.
So the same time
one
period.
federal court was established to preside over patent cases, and that did two things. First of all, it gave far more consistency from jurisdiction to jurisdiction. That was important. Second, it improved the reliability because those courts tended to back off of some of the very anti-patent doctrines of some of the earlier courts. So we got both, I think, a fairer approach to patent protection, but we also got a more consistent approach, which helps business people plan.
Sure.
Well, now that you've had a chance to look over 100 years of this, let's drill down to where we are today. And what we are interested in for our clients is how do we apply this into the markets, and where are we right now as you see it with innovation, and what do you see in the next few years?
Well, there's certainly tremendous innovation going on. I mean, you look at the change in the names of companies that are prominent. You look at the products that we all get to use day to day. It's a marvelous time, really. I do think we have to be a bit cautious. certainly we're coming out of a very terrible financial crisis in 2008 and 9. The recovery's been slow but steady. I think we have to watch, as you folks were talking about earlier, taxes are starting to creep up again. And at what point do we start to restrict inflation and hold people back from investing in promising new ideas? I don't know that we're there yet, but it's something we have to watch very carefully. And just our overall cultural attitude toward business. I think we have to respect risk takers, we have to respect innovators, and we have to give them their due.
Are you a fan of gridlock in Washington? Do you think if neither party can get their way, we're better off, or do you think one party should have a wide open opportunity once in a while to try to create innovation and see what they can do?
Well, I think the lesson of history is that checks and balances are in everybody's best interest. I don't think you want a runaway government in either direction. But I also think that there needs to be a way for good people to come together, reach consensus, and get something done.
Charlie says resonates because it seems like, in what you're saying, Joe, also resonates. It seems like the last few years, especially since the financial crisis, business has been vilified, right? That big business isn't doing their just, what we're supposed to be doing. But that's really not the case, or at least it doesn't seem to be the case. Are there any policies that are currently on the books that shouldn't be on the books, in your opinion, or is there some that should be on the books that aren't in the books? That are we headed towards, as Charlie so elegantly put it, history repeating itself in some way?
Well, I think one thing we have to keep in mind is, and the lessons of history are quite clear, it is really we the people who ultimately control our government, and that's our opportunity every 2 years. So I think we need to think through what do we want to do and how argumentative are we, which is reflected in our Congress. But I do think we should be optimistic about the future. I think eventually good people will come together. I just wouldn't want to see a repetition of the 1930s business bashing, because the lessons are too clear that it's counterproductive.
In a minute and a half or so, have you looked other places in the world to see whether innovation is doing better in foreign countries than it is here?
Well, people ask me when I was writing my book, which focuses on the American experience, about, well, why don't I explore more about Europe and comparisons and so forth. And I think we have to respect the fact that many of their cultures, even those we count as close friends, they have different history, different culture, and I think they like to work out their own problems. One thing I can say with a high degree of assurance, having traveled a good bit, is there's no single country where everybody thinks we've all got it figured out and this is just great.
Right.
So everybody's looking to make progress.
Well, in talking to a lot of patent attorneys that are friends of mine, they say the respect for patents overseas isn't nearly what it is in the United States.
Right. And unfortunately, that's a topic for another show because we're running out of time here. And Joe, your book sounds fascinating. I think people should go out and get the After 100 Years. Thank you for your time. We'll have to have you back. Our next week's guest is Chuck Stieg with SFG Advisors, and Chuck's going to talk to us a little about executive compensation, the good, the bad, the ugly, as they say. Money Matters is now available in Philadelphia on Comcast Channel 6 and Fios Channel 29 every Wednesday at 11 a.m. So before you go for your lunch break, go check us out on Comcast Channel 66 and Fios Channel 29. And that's also presented by PhillyCam. So until next time, your money matters.